Does everyone need life insurance? We're going to get to the bottom of that. How do you choose the right type of insurance for yourself and for your family?
We don't know, but we have somebody that does. Richmond money expert J.B. Bryan is here to talk about this. It's a very important topic as September is National Life Insurance Awareness Month. Make us aware, J.B.
I'm so glad that we're talking about this because I don't think I've ever discussed this in the many years that we've been together. And life insurance is such a big expense for a lot of families. And they don't know when to turn it on and they don't know when to turn it off. And they really don't know. But the answer to Jessica's question, does everyone need life insurance? It's an adamant no. Everyone does not need it. And we kind of live in an environment that makes everyone think that they must have it. But there are many people who are self-insured. So you first have to ask yourself, will someone suffer financially if I have an untimely death, meaning I haven't saved enough? I don't have enough in my investments that they would inherit to take care of my final expenses or take care of joint debts that we have. So people think of getting life insurance because they got married, but they really should be thinking of getting life insurance because you have joint debts. There's a lot of people that aren't married that have joint debts that if something happens, how will the portion that that person is contributing pay for, how will that payment be taken care of, right?
All right, so if you just retired, say, and like me, I had life insurance when I was in radio that was like a year's salary, maybe a year and a half, but I'm not there anymore, so now I don't
it just
have life
stops,
insurance.
and that happens to so many people because the life insurance that you have through work, it doesn't even do a health check, it doesn't ask for anything, you just get it automatically. So I always suggest that if you, especially when you're in the time of life where you really need to have life insurance protection, get your own policy that you can own, even if it's term. Term is less expensive. So I must say there's two major types of life insurance. It will be term or cash value, or you could call it permanent. And there's only those two major types, and then we have all these different pretty names underneath. But it's either a cash value permanent policy or it's a term policy. The policies at work are a term. After you leave the job, a lot of times they'll write you letters and say, would you like to keep this policy? This is how much it will cost. And there'll be different criteria for that. But while you're working, if you buy it while you're younger, it saves a lot of money. But hypothetically, someone like you, Bill, really, you're self-insured. You have the assets to take care of your final expenses. So you don't really need the policy like you needed the policy when you had minor children and college expenses ahead of you. You lived through it. You lived.
Made it to the other side.
You lived. But if you had passed away before your children are educated, that's a major expense. If you still have a home mortgage, that's a major expense that your family may be left with. So, and if you want that to be paid off upon your death, you need to have the assets, the insurance to cover
pay
the
off your home,
assets.
would that be term?
You could pay off your home with term. If you have a home mortgage insurance policy, people do that, and it's basically a life insurance policy that's connected to your mortgage. I don't suggest that because it only pays that one bill. What if your spouse passes and you want the life insurance, but you don't want to pay off that home because you don't want to live there anymore? Well, if your life insurance is connected only to the mortgage, you don't have the flexibility of using that to purchase
other things.
Or pay off the car or pay for college. It's only going to pay off that mortgage.
Wow, and see how overwhelming it gets so quickly, right? Because I'm still like, there's two kinds. There's term, there's cash value, right? One costs less, one ends up being a policy where in theory there's a pot of money at the end, but you're paying that whole way, and then that starts to be in its own investment situation.
And the term costs less because what? You're not putting extra money. The permanent policies cost more because you're putting in extra money. You're accumulating that savings on your own. So I would say be very careful for purchasing life insurance for a retirement plan.
Right.
That is not, there's two separate things there. I encourage you to talk to your financial advisor about retirement planning and then talk to them about your life insurance. So your term can take care of your insurance needs as long as you focus on, I need this for this particular period of time. You can get a term policy that goes out as far as 30 years, but it's not going to accumulate cash value along the way. But if you're investing through your 401k or you have your IRAs going on, you will not need need the cash accumulation as much. In the life insurance, you just need to have the coverage during that time period while you still have a lot of debts, or while you don't have your pension accumulated, or so that your spouse would inherit the pension. But a key thing that I think I want to share is that you want to make sure that your life insurance replaces income that your family will lose upon your death. So if you're $1 million, basically $1 million policy could replace about $40,000 to $50,000 a year in income. So, and people think $1 million policy is huge, but if you're thinking about your family depends on you for $50,000 a year in income, then maybe $2 million is more appropriate if you're making a 6-digit, $100,000 in salary. So analyzing.
So Jess is going to need like a $20 million.
Yeah, right. She'll need a 20.
She's making a big bucks.
But that's a new approach, because back in the day, we'd just say 10 times your income, or, you know. So don't fall into a rule of thumb. Don't even really listen to what the amounts I say. Don't grab this. Talk to your financial advisor. Talk to your licensed insurance agent about what coverage you should have specifically for your financial needs, because just replacing your income may not be enough when you're talking about educating the children and how much college education costs now.
Highly individualized, and Mr. Bevins
highly
is
individualized. But it is insurance. It is Life Insurance Awareness Month.
Okay.
We were just made
Not
aware.
designed to kill you.
Today, JB Bryan offers free money webinars Wednesday at noon and Sunday evenings. You'll find a link to more information on WTVR.com/VTM.
Virginia This Morning returns after we catch our breath.
That's right.